This is a bit of a quirky left of field type of initiative that the government's announced that I've had a number of questions about. It's a scenario where I don't understand really the reasoning for the strategy, other than that they're trying to assist people who are asset rich. They've got a fair bit of equity in their home, but income poor. So they're encouraging people or helping people to downsize their home, which means buy a home of less value and net the difference and able to invest the difference to help their living expense. But the strategy is, or the way that it works, is that the difference between what you sell your house for and buy a new home for, that difference, so say for example you sell your current home for $600,000 and you buy a home for, including stamp duty, for $400,000, you've netted $200,000 in that sale. What this strategy is that you've got to put a minimum of 80% of the proceeds into a special account. So you need to put at least $160,000 of that $200,000 that you've netted from the downsizing into this special account. You could put up to $200,000, but if you can't put more than $200,000 into the account. And what they're doing is that they're saying is that interest and the asset value in this special account of up to $200,000 is going to be exempt from the assets test and income test. So that $200,000 sitting there is not going to affect your age pension. Now, there are a couple of criteria that I think are going to make this too limiting. And the criteria is, and it's not exactly clear what the exact rules are, but you need to have lived in your own home for at least 25 years to be eligible for this actual strategy. I think they're trying to just minimize who can be eligible for it, so that because it's a trial period, they don't want it to be a massive program before they've actually tested the waters. There were a couple of questions from Will, and it was saying, does this mean you have to own your home that you've lived in and live in the same home for 25 years, or is it just that you need to be a homeowner for 25 years? And there was another question, we've leased out our house for a number of years. Are we still eligible? Do we still satisfy the 25-year rule? Now, it's unclear of exactly what that 25-year rule is going to, or how that's going to be applied, so watch this space. The strategy or the initiative isn't fully thought through and isn't fully described as yet or legislated. So if this is a strategy that you think will benefit you, then just really watch this space, watch out for it, because I think it'll be clarified a little bit more in the future. One of the other drawbacks of it is that if you've got this chunk of money in this special account, you can't actually make any withdrawals from it, because if you do, it's going to mean that it's no longer going to be exempt from the income and assets test. As soon as you make a withdrawal, or after 10 years, it expires. So it's really just a deferral of, as you say here, it's just a deferral of the means testing. So I think it's going to be not a strategy that's going to be used broadly, but for some people, downsizing it may be actually useful for them. The other issue is stamp duty as a massive impost for most people in the downsize process. So I find that many clients who are thinking and have gone through the downsize process often don't net a significant amount from that downsize process, because they're either going from a bigger home to a smaller, newer home in the same area, and it ends up being a similar sort of cost. It often doesn't occur that the downsize process nets a significant amount of money.